So what's in store for property investors in 2021? So we're going to get our crystal balls out in this video. I'm joined by Andrew Roberts and we're going to take you through 2021, look at the threats, risks and opportunities for you guys as property investors, so stay tuned. So what we're going to cover in this video is the outlook for commercial property investors, for residential property, for planning reform and all the changes to the planning system, and also Brexit. And to finish off, we're also going to have a look at our opinions on the wild side of predictions on the internet for what may be to come. So if you're not a subscriber to this channel, well, why ever not? We're entering into 2021 and you're going to be needing to keep up to date with all the latest news and info and tips for making 2021 a successful property year. So do it now, subscribe and hit that bell icon and we'll notify you as soon as we upload. So I'm Ranjan Bhattacharya. I'm joined today by my good friend and fellow property entrepreneur, Andrew Roberts. Hello, Andrew.
Hello, Ranjan, and thank you very much for sharing this time with your audience as well.
Well, yes, and hopefully we're going to give you guys some value in terms of our insight. Well, who are we really? We're just some random guys off YouTube who have been doing property for a good few years. When did you start out in property?
About 2005, investing.
2005, I've been doing it since 1990, so we've been around the block a little bit. So for what it's worth, this is our viewpoint of the threats and the opportunities for property investors in 2021. So let's get started and deep dive. Let's just run through the year really and chat about some of the calendar and the key milestones or millstones as they could be for property investors, which really depend a lot on the economic backdrop that we all face.
Absolutely.
So what do you see? Let's take it quarter by quarter. What's in store for the first quarter of 2021?
Well, for me, the way I look at it is there's two sides to this, and I'd like to look at the optimistic side, but the optimistic side is for those who capitalise on the opportunities. So if you're an existing commercial property owner, it might not be a good year of news for you. So 31st December, we generally see lots of retail outlets typically going into administration because their trading year or their Christmas hasn't been brilliant. Now, 2020 hasn't been a great year for retail. So I expect to see a little bit of an offloading of more of those businesses that have really struggled to compete with Amazon and other online retailers.
That's a very good point because every year, of course, December is a massive Christmas trading period is massive for many retail stores. And with COVID and tier 3 lockdown and all this sort of stuff, they've been hammered. So normally what we see is zombie businesses just given that final death knell.
Yeah.
But now it could be a little bit wider than that.
Well, it also links in because at the end of the calendar year, the next rent payment for the upcoming quarter is due. And that typically, call me a cynic, is why businesses typically declare themselves or put themselves into administration because they don't want to pay the next quarter's rent in advance. So that's a tipping point. But I sort of look at it and go, well, that's an opportunity for us as investors, for those businesses that do go under. Now, as landlords, commercial landlords, it's not such great news. However, the good news for commercial landlords is we have a series of permitted development rights, which some are changing on the 6th of April, where space standards become applicable, and some are expiring on the 31st of July. Yes. So now is your time to capitalise on the permitted development rights, in my opinion.
We'll put some links to some videos talking about this. And it's not just permitted development rights to allow you to convert to residential. Correct. But it's also a lot easier to allow different commercial businesses to repurpose. So a restaurant can become a newsagent, a GP surgery can become a convenience store, which previously used to be such a pain.
Absolutely. So you can open the doors to a different demographic of tenants there. And it might be you convert to residential, it might be you bring in a different commercial group, because the landscape of the high street is changing. It has changed quite fundamentally over the last year. We only have to look at the businesses that have failed in the last year to see that there's lots of gaps on the high street. Now, if we can find alternate uses for those gaps, that is where the opportunities lie.
I think as long as you're dealing with areas where there's employment,
Yes, absolutely.
then what you will find is there'll be commercial properties which can be repurposed to residential, and because people have employment, they need somewhere to live.
Yeah.
And then some of the commercial elements will be repurposed to stuff which the people living there need in their near vicinity.
Yeah.
Stuff that you can't get off Amazon. And we're seeing so many eateries come up where previously they needed an A3 license.
Yeah.
Now they don't need that anymore.
Well, I've had a similar situation with one of my properties, and a very frequent request is, or this is an A2 at the moment, can it be made an A3? And my stock answer is, actually, sir, I've already secured that planning permission for you.
Yes.
Because of the Class E permitted development rights.
And still a lot of businesses, I mean, I've been talking to some people as well, a lot of businesses don't realise that they can pick practically any premises and make it into a restaurant.
Correct.
But there's more sort of gloom next year, I guess, because we don't exactly know when this COVID thing is going to end.
No.
People think April, May or whatever. But the government have put in so much money into the economy through all the furlough schemes and deferment of business rates, and there's stamp duty holiday ending in March.
Yeah.
There are a lot of things, aren't they, that are coming to an end, government support schemes that are coming to an end in the first quarter of next year. What are those, do you think?
Well, we've got, I mean, today we had Rishi announce that he's extending by an extra month the furlough scheme.
That's to April next year.
That's till April 2021. So I'm sitting here, and that is giving me clues there might be further lockdowns and further pressure on the economy. But if we looked forward, the next main sort of date that I have in my calendar for next year is March. And March, we've got a series of things happening. We've got a stamp duty cliff edge, potentially. Now, that could cause the housing market to suddenly stall because people rush up to that.
Do you think you'll extend it?
I think there's a very good...
taper?
Yeah, I think there's a very good chance it will either be A, extended by a further 6 months, or B, tapered. I don't think it will totally disappear. We have seen this before. I mean, you and I have been around a little while, and we remember Norman Lamont and his stamp duty cliff edge, and it basically caused the housing market to drop for about 12, 18 months.
I do remember them talking about Norman Lamont when I was in kindergarten.
Well, I am a little older, I'm a little greyer.
But yeah, no, I take your point, yes. You know, we've had disasters with cliff edges in the past, and it's likely that maybe at the last minute he'll introduce some kind of...
I think there'll be some smoothing out. So there are a couple of things. The next quarter's rent is ready, and also in addition to that, we've got the end of the commercial rent deferral programme. At the 31st of March. So because the next year's rent's ready and the deferral ends...
Sorry, just to explain that for the viewers, this is that there's currently a moratorium on evicting a commercial tenant if they're in rental arrears, and that moratorium exists until 31st of March.
Correct.
And the government have said they're not going to extend, but who knows?
Absolutely. I mean, it's one of those. It's already been extended once beyond what it was originally intended to be. Now, because it's a rent quarter date, because the furlough will be ending a month later, because we've got a number of the taxations which have been deferred, such as VAT and some of the income tax bills, there is a good probability that we will see a second wave in March of businesses going into administration. Now, that's not great news for landlords because they might have missed out on the 6th of April, the space standards permitted development, right? So now we have to develop to national space standards.
Yep.
However, we still have existing permitted development rights and the new ones coming in.
I think a lot has been made of these space standards, but I don't think it affects many people because I think the main places where micro studios made sense were in very high value areas, central London, zone 2 London, that sort of thing. But by and large, 37 square meters is a good size flat.
Yeah.
And in many ex-commercial buildings in suburbia, it's still decent. I think the bigger prize with commercial conversions is, as opposed to planning permission, that you have the developer has complete freedom of dwelling mix.
Yeah.
So if I build a brand new block of flats, the council will say, give me some 3 beds, give me some 2 beds, give me some 1 beds. But if I'm doing a build to rent scheme, I want all 1 beds and studios. Whereas with a PD conversion, I have the freedom to do that.
Yeah.
And I think that's a bigger prize. That I think, my advice for people out there is, I think people look too much at what's been taken away and what you can't do, when the focus should be on what you can do.
Absolutely.
And if you focus on that, you'll find there's actually more opportunities than you actually think.
Well, you and I, over the past year, we have grasped opportunities as they've come upon us. Mm-hmm. And we see opportunities out there all the time. And we see people doing opportunities or doing transactions which other people are passing by because they've got the wrong mindset around it.
Yes.
And I think that is key. And, I've been using a phrase, this is the new normal, get used to it. And if we go back to the old normal, great. That way we realign ourselves with the marketplace.
Absolutely. So we've talked a lot about the commercial outlook. Let's move on to residential. I mean, if you're searching around on YouTube, you'll see plenty of people going on about what they think about property prices. Some people think it's going to crash. Some people think it's not going to crash. I'll share with you my views in a moment. But Andrew, where are you on residential property prices in 2021?
Yeah, I think this is a really great one because residential property is paid for by consumers. They are generally employees. Now, if we are seeing waves of businesses going into administration in December and in March, that will tighten the personal purse strings. Now, I believe, based upon what I've seen from Rishi, where Rishi Sunak has introduced schemes to relieve the burden on homeowners, that he will introduce some sort of pressure or scheme on banks to assist those who can't pay. Not those who won't pay, but those who can't pay. That would be an assumption of mine that would happen. Now, I do see an area where there's good employment, where house prices are reasonably strong, perhaps national average or above. So from perhaps Oxford, Northampton, Cambridge down around in a sort of arc where employment prospects are strong, you will see those areas doing particularly well.
What about Hull?
Well, I think Hull, it was
Don't worry about
European
it. I'm just saying that for my regular viewers. Carry on.
But
that will get a few comments.
Being serious, I do see areas of the north of England. Now, I have offices and staff in the north of England. And
what, Edgware?
A little bit further north. Newcastle is north of England to me, but I know you Londoners, you all struggle to get past sort of Edgware Road, don't you? But areas in the north of England have really struggled to recover their house prices from 2008.
Oh, yeah.
And that's because of employment prospects. Now, I've been watching certain areas, and I was watching a shopping centre which isn't the one that we discussed about Rill before, but
Yes,
a different one, where organisations like the Post Office have pulled out of a shopping centre in Wales. Now, why have they done that? Because the employment prospects are low and there's tumbleweed running through the town. Now, as a result...
The folks there can't even afford a stamp.
That's right. That's right. So it's a very desperate situation, and I think certain areas could become desolate of large national chains.
That has been the case for some time. I mean, there are parts of England and the whole country really where population is falling, employment prospects simply aren't there. Yeah. Those business types have, and it's a spiral of decline because no one wants to live there.
Yeah.
And there's not much you can do about that. And I think that was a trend anyway. But I think if you look at areas where property prices are close to the national average, which is about 250.
Yeah.
So basically you're looking at areas where the average price is say 230, 220, 230 and above.
Yeah.
Those tend to be areas which have some element of employment and prosperity and
there's employment and affluence there.
And in those areas it's a reasonable I mean there is a shortage of supply. So are you saying there's a bit of a twin market, if you like? You know, there's not much you can do no matter how much money they want to pump into those places. They will be desolate, and there are some places where it'll be okay.
Yeah, well, if I draw on some data, yesterday the ONS published the latest data on house prices, and what we saw happen was London over the year had risen about 4.8%. Mm-hmm. However, during the month of October, it had fallen 1.2%. Therefore, it's telling us there's price corrections going on. Nationally, the price increase was around 5.4%.
Yep.
Now, when you actually start to dive into that, there are areas that have done better than others. I'm not going to deep dive those areas in this video, but there are areas that are outperforming other areas. And it's, as we've described, areas of affluence, areas of good employment, which are outperforming. Now, the figures to me are telling a story that house prices are rising. And I look back to 2020, and you and I did some forecasts for 2020, and we got them woefully wrong because we missed COVID off our agenda.
Yeah, we did, didn't we? Yes.
But I sort of look at it and go, well, prices are outperforming because of the stamp duty holiday, because people have been locked up for nearly 6 months. Then they've come out of lockup. We've tried to stimulate the economy, and housing is a big part of our economy. It drives a lot of GDP.
Now, of course, we're just two guys on YouTube, so, you know, who knows the future really. But I have a slightly differing view, because a lot of people say that the reason why prices have gone up a little bit is because of the stamp duty holiday. But I wonder whether that is really the full extent of the story, because when you pump so much money into the economy through quantitative easing, which has already been 3 times as much as what was pumped in 2009.
Yeah.
And this time around, most of it has gone directly to people. What happens is the value of every pound actually goes down.
Yeah.
So if prices have gone up, they haven't really gone up. The value of those houses haven't gone up. The values have arguably gone down. It's the fact that there's more pounds in circulation that has meant that prices have gone up, which is one of the reasons why the FTSE 100 companies has experienced such a spike. It's just to preserve their value. And gold has gone up so much in the last couple of years to preserve its value.
Well, I would agree with you on gold and property. FTSE 100, I think there's huge risk there, personally, and I do think I would forecast market corrections as different businesses struggle next year. Because if some of their suppliers or customers are going out of business and consumers have got less money because they've been made unemployed, it will affect the value of those companies. So, and also you don't know, because you're not inside the boardroom, on what the inside edge is on that particular business and the pressures are. So
in terms of opportunity then, we've talked about how the the situation for commercial property is going to be problematic simply because there's massive oversupply of shops and offices in particular. And we've talked about how that it's going to be a twin-track market for residential property. In many areas, it will be okay as long as there's unemployment is good and the average house price you're within the national average house price thing. And then we also know that the government have really fast-tracked this consultation on Class E permitted development. And I've got a video on what Class E is and what this consultation is all about, which you can watch. But that basically allows a whole host of these defunct commercial buildings to be converted to residential use with relatively light touch.
Correct.
How do you see, what's your view on that? Is it going to be a massive opportunity, or do you have concerns that it might not be it might be too good to be true?
I actually see it as slightly less beneficial than the existing permitted development rights and prior approval rights that already exist. Well, under the new framework, we've got a 70-day period to assess whether or not an application is accepted or not. Under the old system, it was 56 days.
But at least there is a time limit.
There is a time limit.
What could have been really bad is if it was like those 2 floors on existing buildings PD in September, which, is
it's 10
got
weeks
no idea.
And can get kicked longer.
Exactly.
Totally.
But go on.
So I also think the fees, at the moment it's £96 permitted development fee for whatever you want to do.
Well, that's true. You can build convert an office into 100 flats and it's 96 quid.
Whereas now it's £96 per dwelling that you create. So there's an additional cost.
But that's not the end of the world.
It's not going to kill most deals. So I don't see that as a killer. In terms of the criterion, there's the same criterion in place that we need to make sure we meet highways policies, contamination, noise, etc. But they've added in...
Which was still the case with some of the old PD.
Absolutely, to make sure that we were creating decent habitable spaces. We now have space standards to comply with. We have adequate natural light, which
are perfectly reasonable. We're not building bat caves.
No, or battery chickens. But we've added in additional criterion that we must have them checked for fire compliance. Now, to me, that's ridiculous because that's covered by building control.
Yeah, I haven't fully understood it. But that was in the consultation document.
It's in the consultation
and I'm sure a lot
document.
of people will
well, we're going to do
debate.
a response to that to help with that debate.
I think the key points here with Class E PD is that it gives small developers certainty.
Yeah.
You know before you buy the thing that you will get permission to do something within these criteria. That's the main thing. And the other thing is, whereas the old PD you could only do to A1 things like newsagents and A2 things like banks and estate agents and offices. The new PD will be applicable to the whole of E-class, which will include restaurants and gyms and all sorts of other buildings which didn't apply before, which is phenomenal.
GP, surgeries and dentists, we can capitalise on all of these old legacy buildings.
So that has to be a phenomenal opportunity.
Absolutely. I would totally agree with you. So, I mean, comparing and contrasting, I think the opportunity through the use class E is the big bonus, and the permitted development rights that are coming in where conservation areas, you can now do things that you couldn't do under the old system. So there is opportunity ahead, greater opportunity, and I feel with the excess of property coming to marketplace through the businesses closing, around June time I'd predict commercial landlords to have a little bit of a financial dilemma if they've got reasonable gearing, because what they're likely to find is existing commercial landlords will have their covenants reviewed by their bank, because when they had a tier 1 client in who's now no longer, that yield on that property will be reflected, and they'll be asked to put money in to that deal to retain their facilities. Also, if they've had their client go into administration, they've had to write off that money, which they may have been taking a mortgage deferral on from the lender, and now the lender says, so how are we going to correct this? I need you to bring us up to date. So it could be a double whammy for them. So we could see, coming out through auctions, a good number of commercial properties.
Of course, yes. I mean, basically, if the cash flow falls on the commercial property, then the banks can revalue them accordingly, because ultimately commercial property is valued based on the rent roll. And the opportunity there is that, so you've got these commercial properties which will be vacant, producing less commercial cash flow, and they'll be suitable for conversion to residential use. But people have got to realise who owns commercial property, and a lot of the owners of commercial properties only bought it for rent roll, like pension funds and the like.
Absolutely.
So they have got no intention. They may know that you can convert to residential and do all this repurposing, but it's not in their remit to do so. So they will simply be sold.
They certainly will be sold, and you touch on a really great point, the pension funds. One of the things that they have periodically is actuarial reviews. And if the yield is not coming in because Debenhams have moved out, Topshop have moved out, then they have a liquidity issue with their pension fund. So again, there needs to be a look at and a repurposing of the whole of that particular type of property, which is another demographic of developer.
Yes. So we've talked a little bit about PD, but there's also these planning reforms they're talking about.
Absolutely.
Where any green space near you will be built on by the likes of myself and Andrew. So what do you think about these planning reforms? Good news or bad news?
I think it's good
Coming or
news.
not coming?
Well, I sort of look at it and go, it goes back to Boris, who wants to enable the marketplace to decide the use of space. Build. And it's all about developing for the future. Now, personally, we were chatting earlier today, and my personal opinion is some of the old Victorian stock really is not fit for purpose. You look at them and they're EPC rated F and G. They were built for a Victorian era. We perhaps need to consider demolish and rebuild on some of those sites. Controversial.
Well, I think the issue with Victorian properties, you're right. I mean, they're not environmentally friendly, and the problem is that in high value areas, because we've converted a lot of Victorian properties into flats, and in higher value areas, it makes sense to insulate them and bring them up to modern standards. But if you're looking at the same identical Victorian terraced house is in Islington, that exists in Liverpool. But if it's worth 40 grand in Liverpool, it doesn't make economic sense to bring it up to standard.
No.
And that's the problem with some of the Victorian
It
stock.
absolutely is. And I think it's an interesting one to follow. I don't quite know where the market will go. I did watch one of your videos recently with Evan Mendoza.
Only one?
Well, I don't have a lot of time.
You can watch them at double speed, by the way. That's a handy time-saving tip. But go on, yeah.
And that was talking about how more with a new build, we can make them energy efficient and financially sound in doing so. And I think that was very smart. So if you haven't watched that video, I'd recommend you do
put a link
get on and watch that video.
Now, I think the planning reforms is basically making it. They want to kind of allow a lot of building in greenfield.
It makes it easier to develop.
But the problem I have with that is, well, I think too much building will obviously affect property prices quite a lot. I mean, people don't read that. There was a massive. There were decades in the 1800s. I think it was around 1860 to something or other, where property prices fell dramatically because of the number of new builds at that time, Victorian houses that were coming on stream. And we could see another bout of that, which which in turn starts to affect the viability of doing such schemes.
I think it all sounds great in theory to have a target of 300,000 units to build per year.
Yeah.
Now, with permitted development that you and I do extensively, we're creating handfuls of units at a time, and we're taking buildings and we're repropositioning those buildings as we need to, and we're fulfilling a market need. In my particular area, I have a niche and I create dwellings for a specific niche of customer. Now, looking at it from a major house builder, a Barratt, a Wimpey, their business model in the old days used to be build, and then we'll sell it. Now, they create the show homes and then they sell off the show home and build to demand. So it's okay setting a target of 300,000 and saying, well, we've got the land there, we've given the permissions, but if nobody is out there buying, that will throttle back the new house builders, and that will keep prices down, and that's partly why they throttle it back, is they'll only build to demand, and that keeps prices where they need it.
And one of the reasons, as you know, I'm a big fan of permitted development and converting existing buildings, but one of the things about the UK I've always found is that we don't like new towns. It takes years. I mean, Docklands is so trendy now, but in the early 1990s, no one wanted to be there.
Yeah.
And when I was growing up in the 70s, Milton Keynes was the butt of comedian jokes.
Absolutely.
You know?
And Swindon before that.
Exactly. Well, I was...
Sorry.
That's about as far back as I remember. But the point I'm trying to make is that we don't like new towns, but when you've got defunct commercial buildings which are in an established town where people already want to live, the concept is proven.
Yeah.
Convert it to residential, and Bob's your uncle, as it were.
Absolutely.
Okay, so no discussion on 2021 outlook can be complete without tackling the big B, the Brexit issue.
I thought it was Friday night beer.
Oh, well, we'll get on to that. But Brexit, is it all going to be a disaster or a bit of a damn squid?
I personally draw a parallel with Y2K, year 2000.
You won't believe this. I was actually going to say that as my comment after you've had your bit. Completely unscripted. Go on.
I draw a parallel to Y2K, GDPR, these big things that people get het up about. Now, my take on it, and I have commercial businesses, as you know, and my commercial businesses, we've liaised with our suppliers, we've liaised with our customers, both in Europe and out of Europe. And to be perfectly frank, the Europeans are saying, well, you'll have to produce commercial invoices. Well, we do that with goods that go outside of Europe already. And you'll have to pay tax at the port. Well, we do with goods we bring in from America, from the UAE, from China. So there's no difference there. The only small difference for me as a trading business is a cash flow timing on the VAT.
Yeah.
So to me, as a commercial business, I might have an import tariff to add on to European products I bring in, or that I sell out, my customer will have to pay a tariff. That's just a price increase. It's a tax. So get used to it. And we're not talking large sums of money. At most, they tend to be about 2.5%. So it's in line with inflation, really. So I don't particularly see Brexit as affecting us massively. Where I do see it is affecting specific sectors. Now, I know the Europeans have financial services in their sites, and they've been building different sites in Europe to take financial services over there.
But none of the bankers want to work in Frankfurt.
Well, that's the exact point. It's not just establishing the banking system. You have to put the accountants and the lawyers around it, and also the infrastructure of all of the world markets changing to suddenly recognise a European city as the centre of the financial services, when London has been that for decades. Now, there will be ripples going on, and there will be political statements made by companies who go, oh, well, we're not happy and whatever. But I perceive this as being a 2-3 year little bit of speed bumps going on. But other than that, it won't have a major detrimental effect on our economy, in my opinion. It will be speed bumps where politicians are chest bumping each other for territory. At the moment, we have it over fishing.
Yeah.
And the Dutch and the French and the Belgians are getting very upset because the Belgians and the Dutch are going to fish in French waters. They haven't got enough fish for themselves, and they come to British waters at the moment. The fish will be landed by whoever, and then it will be bought and exported by whoever.
I think we're going to have an 11th hour deal, or the 11th hour will be miraculously extended. Yeah. And listen, we'll lose a bit of fishing, but who cares? It's a pretty little industry. It's not. It's worth sacrificing that for the greater good, and we'll be forgetting about that because I think COVID, the aftermath of COVID, is going to be far
I think that's more
bigger.
More devastating, the effects that will have on companies and jobs.
Yes.
And because it affects companies, they occupy commercial premises. Because it affects jobs, that's people, and that's paying mortgages or rent. So they will have a bigger effect on the property market than Brexit will.
Yes. So I think Brexit will be fine. Obviously, if you're fishing in Grimsby, then might not be. But apart from that, it should be relatively okay. How many more people can I offend in this roundup of 2021? So we've covered a lot of ground in this. I mean, I think the no discussion about 2021 can be complete without asking your opinion on this. And what I've noticed is that when I put prediction videos out there on YouTube, I get a lot of comments, as you know, and increasingly some of the comments are about, look, Ranjan, don't you know about the global reset, or the it's all going to hell in a high cart, and there's a global conspiracy to sort of make you poor, and they are going to take everything off you, so there's no point in doing anything. What's your take on all these theories, or haven't you heard them?
Well, I try and focus on positive things in life, and I try and do positive things. I do hear people discussing such theories, and I'll leave it at theories. My personal approach is I look at the things that I can influence. Can I influence Brexit? No. Therefore, am I going to get worried about it and lose energy and effort over Brexit? No. Can I influence transactions that I'm looking to purchase, add value to, refinance, and tenant or sell on? Yes. So I focus my energy on the things that I can change and I can influence. And it's a bit like some people like to watch Dead Enders, Crapination Street on television. I personally like to fill my brain with things that expand it. So it's a similar sort of concept. I'm filling my life with things that are going to add value. And if there is a reset, great, okay, fair enough. At least I've been contributing my efforts to society. On the other side of it, if there's no reset, I've just taken 4, 5, 6 steps ahead of everybody else in the field.
Absolutely. So a lot of the people who make these sort of comments are doing that as it's kind of an excuse for inaction or inactivity. So if they are right, and there is a global reset and it's all going to hell in a handcart and all of that, then we're all stuffed anyway.
Yeah.
But if there's a small chance that you tin hat people are wrong, then you've done nothing, whereas we've actually just got on with stuff.
Yeah. And in the meantime, we might as well enjoy a glass of beer or something finer.
Exactly.
Whereas, because we've been creating the money to be able to do so.
Exactly. And while we go off and enjoy some European beer, I think it should be,
Definitely.
in anticipation of a Brexit deal, and decide and chat about which arm we're going to get vaccinated in, left or right, and where the microchip is going and all that sort of stuff. And we'll leave you guys to ponder 2021. But just to summarise, I mean, I'll just give a few closing remarks. I think there's always opportunity. I've been doing property for 30 years. There's never been a year in property where there has not been opportunity. But the opportunities are different according to the circumstances. So what you've got to do as an entrepreneur is to keep your ears to the ground and figure out, in the new circumstances that we've got, where are the opportunities and how do you exploit those opportunities for your benefit and your game plan. And that's what we'll be keeping you informed with on this channel, so make sure you've subscribed if you haven't already done so. Andrew, any closing remarks to...
No, I think my closing remarks are, get out there, this is the new normal, take action, and have a lot of fun next year rooting out those golden nuggets of opportunity.
So guys, make 2021 your year, and see you guys in the next video.